won't be in billions. It will definitely be in trillions at first, and then slowly that will become tens of trillions of dollars entering the digital asset markets. As this is happening in the stock market, small investors, medium investors, giants will, almost everyone will partially invest into crypto among other alternative investments such as, safe haven assets. So yeah, it is also sure that, of course, investors or the real money, the smart money, would be looking at all the expected outcome for next decade. And one of them mean that's the change in the monetary standards. And here, ISO 20022 shows this. Customers on RippleNet are pioneers in this new system. So that is worth noting. Now, when we see this, question to ask is like why they are letting it public now. Maybe they have positioned their investments well enough and now letting the retail and small investors, small guys, knew this. So they will come in and they will slowly lift the market after, the smart money has already accumulated their positions. And afterwards, this one. And that's so interesting to listen to.
When we think about, at Spring, when we think about money, we don't just think about XRP or we don't just think about cryptocurrency. We think about all the money. In fact, we had a hackathon yesterday here in partnership with Blockchain at Berkeley, and our t-shirts actually said, hack all the money.
So the key point to take away from this video is like everything is going to be tokenized on different ledgers, and it need to be on a base which has that interoperability to move value around so they can do their business. So it's simple and clear. All sorts of value will be coinciding or at least coming and touching XRP as a bridge in future. Now who see that early will be rewarded. Why? Because this can actually happen. I don't know about this, but this posted by, that's in Arabic, I can actually read. So that price just popped out from the bottom where we are now towards 7,000. I'm not saying that's gonna happen tomorrow, but this is actually possible. This can happen, but this can't be actually neglected even if it grinds slowly towards reaching this price point, say in 10-20 years. I'm actually waiting for that, because in the meantime it will pass through different price points like the previous all-time highs, then 10, 50 and so on. So my focus is more on accumulating, and I came across on this one from Crypto Kevin, and it kind of resonated with what we talked about here in our previous chart analysis. Like if you were here, you actually would have seen that, right? So I had the same perspective, and hence still 30% of that dry powder which I talked about is still there. I know that's comparatively low. Previously I had around 60% of dry powder to buy low, but now it's around 30% because whenever it dips I kind of get tempted and I buy. So anyway, if it's gonna go like this and reach that bottom, I'm not gonna miss that, because the previous bottom, if it's gonna make a double bottom or even make a low, I won't miss that. Welcome to the Scientific Investor channel, where we discuss crypto and science behind investing regularly. Now, why I stated I won't miss that? Because I really shouldn't be missing that. Looking at all these information, which, it's so easy to connect with one another, I can clearly see that, nations are actually joining hands and they are stating this is gonna happen. This is a document which is not old, it's from April 2020, and the OECD actually reports, if we actually concentrate, it's so clear in this. Say we'll start from this particular page. Here it states about use of blockchain technology for settlement and correspondent banking. Now in previous videos we already discussed how the correspondent banking works and this nostro vostro shit thing and all. So that is kind of the backbone of cross-border payments as of now, which is kind of changing because for small banks it's really hard to maintain that. So based on that, approximately 5 trillion is sitting dormant in these accounts. Now that is kind of a varied report. In one report we have actually seen 10 trillion and the other one states 27 trillion. So that is kind of varying from various reporters. When we actually move to the bottom in that, they actually talk about Ripple, IBM's and Swift itself, but the use case of Ripple is being highlighted. Now they give example of the use case of Ripple. So when we come to the next page, we can see this one. Ripple, a technology company, focuses on cross-border payments. Now, blah, 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 blah. And when we come to the bottom, it's highlighted here, on-demand liquidity, and it shows XRP as a bridge currency. Now, what did we talk about? It's between fiat to fiat or any value. That's a different story, and that's actually coming in my opinion. But as we read through this document, we can understand that they are actually looking at this, and they understand that this is the future, because as we move, we can actually see the last mile delivery here. If you have given concentration to one of our previous video or Ripple Insights directly, they actually put out a document in which they are showing last mile delivery is here. Now that is happening, and at that time many of us were thinking, like, initially we heard from Ripple directly that they will be, it's crawl, walk, and then run. So if we were at the first mile during that time, say 2 years or 3 years back, when Brad stated that this is the first mile of the marathon, and now that document stated last mile delivery. So it can be like this, because as of now, the last point where it's actually given to the destination account is kind of slow. So that has many different points in it. It actually shows financial inclusion, even the internet connectivity, regulations, and all those stuff. But the last mile delivery is one among important things in that. And that is where this can actually affect directly, because with these networks, it's impossible to actually miss those kind of things. And then when we move into the conclusion of the entire document, they actually conclude this. The use of blockchain technology facilitates KYC procedures, resulting in efficiency gains, cost reductions, improved customer experience in the process of onboarding customer. And when you actually go through that, they really talk about clearing the settlement process for the cross-border payments, which will give you that transparency and safety. At the same time, you're abiding all the regulations. So how many blockchains do you actually know which actually works with banks or central banks after providing this type of regulatory clarity in it? So that is where this is so important, because wherever they are actually talking about this, you can actually understand they're talking about cross-border payments, remittance, settlements, everything, and they're highlighting XRP. Now at the bottom, if you actually look, you can see FSB is there, BIS is there, G7, G20, and all those guys, we have seen their documents, right? They directly talk about this. So if you can't still see this, it's going to be really hard for you ahead. This is so interesting. Steve is coming out and stating, there is increasing demand for cryptocurrency, digital assets, blah, 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 blah. So they are also looking into it. Now that is on an investment perspective, not just the utility perspective. Now, yes, after watching, this utility perspective is so strong, but at the same time, now the investment perspective is also being pushed out.
Thank you for being here. Recently, as you know, there's been a great deal of interest about digital assets, including cryptocurrency.
Hope that message was really clear, right? Because today we can actually see that the interest on digital assets is increasing. And if you directly look at any institution, say, which is actually going to partner with fintechs like Ripple and going to use on-demand liquidity, in that aspect, currently the price of XRP is low, because XRP is a native currency on that particular ledger, right? Once the investors step in and push the price up, then it's gonna be really hard, because once the price actually moves up, the herd mentality kind of kicks in, then everyone kind of buys, the volatility increases, and of course it's for investors, they actually want volatility to make money. And the other area is like this. Say for example, like XRP Kings actually shows this, like banks actually ditching Swift, instead they are using crypto, and they actually talk about like they are using a USDC for the cross-border payments. And just after watching this, I think it's after watching this type of article, many in my scientific investor family started asking, then why should they be using XRP? So the first thing is, you see, the same bank is offering custody and trading for these assets. Now, why do they do that? Because they see that the future of this asset class is so strong. Now, if you actually see that as an investor, you would look at one asset and check how this is going to perform for next 10 years, 20 years. Okay, now keep that aside and come to the bottom. Like they used USDC instead of Swift network, which takes a lot of time. Now I agree, but what you have to see is with the addition of USDC, it's automatically United States dollar, right? So when they use that, they actually get the efficiency of blockchain using that technology and the transparency, or the validity of a United States dollar. But I don't actually agree with the statement, because many of the nations will not be actually relying or won't be liking to rely on USD, because here it's like speed and the transfer speed and other technology side is actually achieved, and the reliability of USD. Personally, I don't actually think that, because if you just look at United States, they may be happy to do that, but if you're looking at cross-border transactions from different countries, I don't think everyone is actually going to rely on USD, because that's why Chinese yuan is coming out, and you can actually see that digital yuan be pushed out, digital euro being pushed out. Everyone is actually coming out. Russia, China, India, everyone is talking bilaterally to decide that they're going to ditch dollar, and we know that, right? So in that aspect, if dollar is going to be depreciated, or say it's going to lose entirely, like what we saw from Brad here, it's about extreme inflation or hyperinflation. In yesterday's video, we actually pointed that out from Brad directly. He was talking about that, showing the example of Germany. That was really bad. If you want to buy a coffee, you would be taking a bag full of fiats. So at that time, no one would be liking to something which is backed by fiat. That doesn't actually make sense, and that is where you have to use your brain. Why is the central bank directly going for central bank digital currencies? Why are they trying to shift it towards synthetic central bank digital currency? That is something to understand, because if you're understanding that properly, now the externals are actually being pushed out to this. You can actually use this, blah blah blah, but at the same time, it's the central banks who are actually moving into central bank digital currency era, in which they are using those stuff to actually support their liabilities, their assets. So they are going to back this new asset of their, say, synthetic central bank digital currency. Thus, in that aspect, every country would be doing the same. And then once they actually have that, they don't actually need this. Say, for example, I don't know whether you guys understood this or not. I'll try to put a simple example. If you have fiat, say you have euro now, you want to send that to dollar. So you will take your fiat via a bank, you're changing it into USDC, and then from there USDC is traveling to the other zone and then changing into another fiat, right? Now think you have central bank digital currency, so you already have this technology with you. Then why would you actually need USDC to transfer this? Because if you already have central bank digital currency, you would be looking for a bridge asset which can be much faster, which can be much efficient, which can give you a less fee, and then abide by all the regulations. So that should be something from central banks, because the central bank digital currency, as the name illustrates, central banks control it. And if central bank is stating that we are going to go through this particular ledger, which is interoperable all around the world, then I don't understand the doubts which many have. And as we started stating, trillions are going to come in. This is XRP Buddha, which is showcasing our old one from Stefan, which is, with Ripple, XRP and the Interledger protocol, they will be going through trillions per transaction per second. Now that is going to be huge. Now when they highlight without any central authority, keep in mind, if it's going to be a central bank digital currency, there will be a central authority, but not like what we have now. Instead, it would be moving in a decentralized manner through the ledger, but both ends, the sender and the receiver, would be kind of 100% regulated, so that it's kind of control itself. I won't say it's completely decentralized if you're looking at it as a exchange of value, because both sender and receiver end, if they are regulated, then yeah, the central banks and the governments do have control on that. But that's not a bad thing, because when we are looking at the entire world, and as we just heard from Ethan here, if they are looking at all the money, then that directly makes sound, right? All the money will be in tens or hundreds of trillions, which need to move from one ledger to another. Money doesn't actually sit there, because for normal people it would be sitting in their savings account, but for investors, they know that movement of money, that's the cash flow, creates money. That's how rich become more rich. So while you are investing in a particular asset, do consider what's coming ahead, because just looking at the price as of now and being depressed doesn't make sense for you if you are really an investor. If you're a trader, then yeah, without volatility you can't make money, even if it's going down or up. If you're on the right trade, you're gonna make money, but that's kind of having higher and higher risk for you. If you're an investor, keep that mentality and stay in for that time period until these fundamentals actually reflect in price. I kind of thought there is kind of a confusion about following this channel. In Twitter, it's XRPDNI. That's at XRPDNI1. If you actually want to follow this channel, that's the Scientific Investor family, you can actually come to Twitter and follow me using this one.